Good Sunday evening. Welcome to Everibus Trading Weekly Stock Market Update. I'm recording this at 1:43 a.m. despite having work the next day. But for my 17 followers, let's fucking go, man. Okay, as usual, let's start with key news update. Currently, Fear and Greed Index, we are currently in fear territory, which can be a healthy pullback for higher prices. That is if you believe higher prices are coming, right? So for the past few weeks, for context, we are actually in greed territory, and owing to the recent pullback and more notably 5% on Friday, we are currently reaching fear territory. So later I'll be going over my outlook for the day, so please stay outlook for Nasdaq, and please stay tuned. So Straits of Hormuz effectively stay shut despite ceasefire, but as usual, equity market still doesn't care. The latest update is that it's still continued back and forth between the two countries, US and Iran. Some hope for ending the war would be that there was actually a congressional vote putting more pressure on Trump to actually end the war. So there's actually pressure is ramping up on the US side and also the Iranian side as well because of the US naval blockade that's reportedly still in place. Next, a key watch point for last week would be the strong jobs report coupled with higher inflation that has actually led to a rate hike expectations and tanked the market pretty hard. So on just Friday itself, the market actually tanked 5%. So then the key question is, what's next, right? And to answer what's next, let's go through the key macro indicators. Firstly, let's start with Nasdaq 100. There was a strong sell on Friday, sold down about 5%. My personal view is that I reckon further selling about 1-2% on Monday to take out lows before reversing. So if we actually take a look at the Nasdaq 100 chart, right? So let me just open this. So my own personal view is that price essentially sell down damn hard to demand. We have liquidity here in terms of a loss to be taken out. So let me just annotate this properly. So liquidity, same level. So my view is that I would expect price to take out this low and then before start making its way up. As to whether it can break all-time high or it will start ranging, that's a question I do know, right? But my key point is trying to make is do not start panic selling now. From this point to say the lows here, maybe you can say sell about 1%, 1+% ish, and then perhaps you can ride it out maybe to the top end of the range and then you get out. Because from a risk to reward standpoint, it's very worth, right? Like you're essentially risking like 1+%. If it doesn't bounce, you get out, sure. To essentially make say about 4%. So it's a like kind of like a 1 to 4 RR trade. So why would we not take it? Right? And there are also reasons why I'm saying that it will take out this low and then reverse, which I will go through them in a separate video. And I'll be uploading it as well. Okay, so that's for Nasdaq 100. Next let's take a look at the VIX, right? Let's take a look. So VIX, I have been calling for VIX to actually bounce off this green zone. Previously, I highlighted I think this area here, but I decided to refine it further given how strong the market was. But eventually didn't really tap my zone of about 14.5, and then it reversed upwards. So my personal view is that I expect VIX selling to expect VIX to sell, reject this zone and then sell down, which is consistent with my expectation for Nasdaq, right? So for those of you that don't know, if VIX go up, Nasdaq go down. If Nasdaq go up, VIX go down, vice versa, right? If you take a look at the previous few times, right, where VIX was in the downtrend and then there was a strong spike up, right, it usually selling followed after. So it's important not to include these, right, because price is noticeably already shifting up, a higher high, higher low. So that is the start of a new uptrend. But this was just a downtrend and then it shifted up, right? So if you take a look, not here, not really here. Maybe you can make a case for this. Price was in the downtrend, trying to reverse up and then start selling down. That's one. Second example, maybe price was in the downtrend, rallied, pump, then start selling down again. Other than that, let's take a look. Price was in the downtrend, tried to break and then sell down again, right? So the past couple of times, or rather, this is a very possible scenario. So I'm calling for that actually. You take a look at this example, right? Downtrend, try to break back up and then sold back down, right? But just because price sold back down doesn't mean that, oh, the market is going to go on a euphoria again. It can sell back down, tap this zone, and then really reverse up again. So that could be the last leg, right? Either ways, I do think upside for the market is pretty limited now. But the whole point I'm trying to make is do not panic sell here, especially like if your positions are in the red. Okay, if you're already down 5%, right? Take the risk of that 1-2% more to perhaps make back your money and even more, right? Look at the charts. Don't make your decision based on fear. Okay, next, after the VIX, let's take a look at Bitcoin. Bitcoin, this man has been selling like no tomorrow, man. I don't even know what to say. So previously, we rejected all this supply as what we have expected. Last week I called for a bounce here, which apparently didn't happen, right? Once it closed below this liquidity line or like flag pattern, you will call it, it's bound to sell down. Personally for me, right, you short every pullback of Bitcoin. Like if it goes pullback, look for a reversal pattern, then short it back down, right? Bitcoin is incredibly weak, so look to short it back down. Next, other than Bitcoin, let's take a look at DXY. Not much here. Still calling for higher prices, but that's about it. Not doing anything. Okay, Brand, we remain in the range for the large part of the last 2 months or last 3 months actually, since the 9th of March. And my stance still hold, right? Buy at support and buy at support and short at resistance. I do think that that it's very difficult for brand to actually break out of this range unless Homers is open, of which direction should be down. Other than that, just look to buy out anytime it touches demand. I mean, of course, don't blindly long, right? Look for a reversal pattern. Okay, then that's for overall macro update.